Welcome to Talk Tickers. We're your shortcut for getting up to speed on the latest earnings calls.
And today, we're diving into the trade desk.
Yeah, we'll break down their Q1 results, look at what the CEO and CFO highlighted, and, try to make sense of it all for you.
All right, let's get straight to it. The first quarter of 2025 looked pretty good for them. Revenue hit $616 million.
Wow, okay.
Yeah, that's a solid 25% jump compared to last year. Definitely beat expectations.
And profitability.
Also strong. Adjusted EBITDA was $208 million. That works out to a healthy 34% margin.
Nice.
Adjusted net income came in at $165 million, or about 0.33s per share. And they generated quite a bit of cash, $230 million in free cash flow just in Q1.
So strong quarter behind them. What about looking forward?
Their outlook seems confident too. For Q2, they're projecting revenue of at least $682 million.
Okay.
Now, that's about 17% year-over-year growth. You have to remember they're comparing against a quarter last year that had a lot of political ad spending, so that 17% is still pretty decent considering.
Right, lapping that political spend. Makes sense.
And they're estimating Q2 adjusted EBITDA around $259 million. So, yeah, like you said, strong, present, confident outlook.
Okay, so those are the headlines. But what's actually, driving this? What were the key themes from the call?
Well, a big piece seems to be this major company upgrade they did back in Q4 of last year.
Ah, right.
That's apparently starting to really show encouraging signs now and contributing to growth.
And are they growing faster than the market?
Seems like it. They highlighted that their revenue growth is still outpacing the wider digital marketing industry. That usually signals, market share gains.
Okay.
Strategically, their focus seems to be on three main things. Navigating the tricky macro environment we're in.
Sure.
Capitalizing on what's happening with the open internet, and continuing to push upgrades on their own platform, particularly KOKI.
Let's unpack that macro piece first. Everyone's feeling the uncertainty. How are they addressing that?
Yeah, they acknowledge it. Said that while Q4 felt relatively stable, Q1 definitely saw more volatility. Major brands are being more cautious, trying to navigate the economic uncertainty.
So what's the trade desk's role in that?
They're positioning themselves as like a source of stability and vision for their clients.
Yeah.
Trying to be that steady hand.
And does programmatic advertising itself help in this kind of environment?
Absolutely. That's one of their key points. Programmatic is just inherently agile.
Right.
Brands can adjust campaigns almost instantly based on real-time performance data for every single ad impression.
Yeah.
So when the market's choppy, that ability to optimize on the fly is a huge plus.
Makes sense. Maximize every dollar.
Exactly. And their strategy seems to be pretty aggressive, really focused on winning market share during these headwinds. They mentioned doing something similar during the pandemic shift to streaming. Their CEO actually used the phrase grabbing land.
Grabbing land. Okay. Opportunistic. Let's shift to the open internet. We hear that term a lot. What's the latest thinking there from their perspective?
There seems to be this growing conviction, maybe accelerated lately, that the open internet, basically everything outside the big walled gardens like Google and Meta, will increasingly be served by just a few truly objective demand-side platforms, or DSPs.
And they see themselves as one of those objective players.
Precisely.
Yeah.
They pointed to several recent developments that they believe significantly boost the prospects for the open internet and therefore for them.
Okay, like what? What kind of developments?
Well, quite a few, actually. First, Google being declared an illegal monopoly in a couple of U.S. court cases this year, plus, general scrutiny of their auction practices globally.
Right.
Then there's a lawsuit against Meta arguing their ad auction pricing is flawed. Also, the Google trial finding that things like first look and last look auction practices were illegal. And separately, a judge ruling Spotify can have direct payment options, bypassing Apple's cut. And maybe surprisingly, Google announcing they won't be getting rid of third-party cookies entirely in Chrome after all.
Wow, okay, that's a lot happening. How does all that tie together to benefit the trade desk?
The underlying theme is a move towards potentially a fairer, more competitive digital ad market. Less dominance by the walled gardens, more transparency.
Which plays right into their objective model.
Exactly. That's their argument. The cookie decision, while maybe impacting a smaller part of their business now, helps stabilize browser-based ads for the time being. The bigger picture is this expectation that regulatory pressure will force the walled gardens to change how they operate.
Leading to a more competitive supply chain.
That's the idea. Maybe Google focuses more on search and YouTube, Amazon more on Prime Video and its retail side, leaving more room for objective players in the general display and CTV space.
And speaking of CTV, connected TV, what's happening on the supply side there?
They're seeing more inventory coming online, partly driven by, well, economic pressure on consumers, leading to more ad-supported streaming options.
Right, more free or cheaper tiers with ads.
Yeah. And that creates more of a buyer's market for advertisers, potentially driving down prices, but also leading to richer data about the ad slots. Plus, wider adoption of things like UID2.
The identifier solution.
Right. Publishers not using identifiers like UID2 might under-monetize, which could actually push the whole ecosystem towards a better, more relevant ad experience on TV eventually.
Yeah.
They see CTV as like the kingpin of the open internet.
Okay, so the external environment seems to be shifting in their favor. Let's talk about their own tech. The platform upgrades, especially KOKI and OpenPath.
Yeah, big focus there. OpenPath is an interesting one. It's designed to give advertisers way more transparency into their buys, where the money's actually going.
Then for publishers.
It gives them insight into what advertisers are willing to pay. They cited examples like Arena Group, the New York Post, seeing significant jumps in fill rates and revenue. Vizio, too, on the CTV side.
So it's about supply chain efficiency.
Exactly. Keeping the intermediaries, like exchanges and SSPs, accountable, driving innovation there.
And they bought a company, Sincara.
Right, Sincara, a metadata company focused on, again, supply chain transparency. That tech is being baked into KOKI.
Okay.
And interestingly, they've relaunched it as Open Sincara, a free tool for the whole ad tech industry to use. Sort of a gesture towards improving transparency across the board.
And KOKI itself. How's the rollout going?
Ahead of schedule, apparently. They said about 2/3 of clients are using it now, and most of the ad spend is flowing through it, expecting full adoption by year end.
What's the core idea behind KOKI?
It's meant to balance what clients need today with a forward-looking view on where value is shifting in programmatic. They're adding the final pieces now, including a new way to manage deal performance.
And AI is part of this.
Oh, yeah. Their KOA AI tools are integrated throughout KOKI. They claim it's delivering really significant performance lifts.
How so?
They contrasted the simple, cheap reach metrics you might get in a walled garden with the more complex but ultimately higher-performing outcomes through KOKI on the open internet.
Got an example?
Yeah, they mentioned Deutsche Telekom's Magenta TV streaming service. Using KOKI, they apparently saw big improvements in actual post-click conversions and a lower cost per conversion.
So, tangible results.
Seems so. They said clients adopting KOKI are seeing, on average, something like a 42% drop in cost per unique reach, plus improvements in those bottom funnel metrics, cost per conversion, cost per acquisition.
And is it helping with data usage?
Apparently, yes. The data marketplace within KOKI is supposedly easier to navigate, leading to more use of third-party data in campaigns.
It sounds like a lot of internal changes, too, not just the platform.
Definitely. They mentioned upgrades across the board, engineering shipping faster, product processes, go-to-market teams. They also brought in a new COO, Vivek Kundra.
Ah, from Salesforce.
Yeah, apparently he has experience from Salesforce during a similar high-growth phase. And they also flagged strong growth in their JBP pipeline joint business plans.
Meaning deeper client relationships.
Right, more strategic long-term commitments from big clients.
Okay, so looking ahead to Q2, we talked about the guidance. How are they balancing the optimism with the macro uncertainty?
They're definitely acknowledging the volatility, aware it could impact big global brands, but they seem pretty confident in the underlying business strength.
Driven by KOKI, the team, those JBPs?
Yeah, exactly. And they pointed to their track record. They've apparently gained share during past downturns, so that gives them some optimism. Hence the $682 million minimum revenue guide for Q2, that's 17% growth.
And financially. Still investing.
Yeah, they talked about being thoughtful with investments, continuing opportunistic share buybacks, but definitely still investing in infrastructure and talent for the long term while keeping expenses flexible.
Okay, so boiling it all down for, investors or anyone trying to get the big picture, what's the key message from this call?
I think it paints a picture of a company that feels it's executing well on its strategy, right, as the external landscape is shifting in potentially favorable ways.
So the upgrades are working and the market dynamics are helping.
That seems to be the narrative. Strong Q1, decent outlook despite the macro worries suggests their platform upgrades are resonating. The regulatory shifts, the walled garden evolution, these could be significant tailwinds.
And KOKI delivering results is obviously key.
Absolutely. That validates their core tech investment. Plus, continued growth in CTV and internationally points to where future expansion might come from. And that focus on supply chain efficiency with OpenPath tackles a big industry pain point.
All right. That brings us to our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on all this. What's one that springs to mind?
Okay, chew on this one. Again, purely hypothetical. How about a pair trade? Long a trade desk, short a major walled garden, maybe one particularly reliant on first-party data that could face more regulatory heat or lose share if advertisers shift to the open internet's perceived transparency.
Interesting. What's the rationale there?
The idea is, if the open internet does become fairer and more efficient, and platforms like KOKI keep delivering performance, the trade desk could benefit disproportionately, possibly taking share from walled gardens struggling with regulatory issues or adapting less quickly. It hinges on that regulatory pressure continuing and KOKI proving its worth.
Plausible, if a bit edgy. Got another one.
How about this?
Yeah.
A longer-term play focused on content publishers, maybe identifying publicly traded media companies or even related ETFs that are really leaning into things like OpenPath.
So betting on the publishers who adapt best.
Yeah. The thesis is, if the open internet gets more efficient, the content creators who connect directly and effectively with demand via platforms like the Trade Desk might capture a bigger slice of the ad revenue. So you look for publishers actively highlighting success and revenue uplift from these kinds of integrations.
Another interesting angle. Okay, just to reiterate for everyone listening, these are purely thought experiments.
Absolutely not financial advice. Do your own research.
Always. So, to wrap up our deep dive today, the Trade Desk reported a strong Q1, fueled by platform advancements like KOKI and OpenPath, and potentially benefiting from shifts towards a more open internet.
They seem well positioned, despite the economic uncertainties, to continue pushing for growth and market share in that really dynamic digital ad space.
Thanks for tuning in to Talk Tickers. We'll catch you on the next one.